Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So as usual, we have prepared a report on the gold market, and this time we have taken some general look, so we don't have some really specific factors or news that might be treated as some vital for gold market. But in general, the combination of the recent events and numbers that we've got supports our long-term bullish view. We do not see any reasons for now to suggest that current tendency is over or near to be over, and we think that it should keep going. At the same time, in recent few weeks or maybe a couple of months, we see that the amount on the speculators in the gold market have increased significantly. That not very pleasant moment for day-by-day trading, because we have to be prepared for volatility rising. It means sharper swings, greater volatility, greater wobbling activity here, and it will be a bit more difficult to plan intraday trade stops, daily trading stops. But this is the byproduct of the popularity. Every market that seems great, showing good thrusting action, it always attract speculators, and that's just the thing that we have to agree whether we would like to or not. Another important moment we think that has happened just recently is, the House has approved the decision to expropriate Russian assets and to force the China to sell TikTok under the hazard of confiscation or blocking on United States territory. So I even do not want to talk about these assets. It's just because just $5 billion. So this is not really some important amount. But with this decision, we have make an analysis of this recent event. Shortly speaking, that dollar is start getting some toxic features. First of all, it can't provide the protection with the inflation, and investors start going to the exit. Second, it does not guarantee anymore the safety of private property. And these two features are deadly for any so-called global reserve currency. We suggest that the sell-off of United States treasuries could accelerate, not immediately, but it will go in on a higher degree and spinning up as we are going to the future. Currently, the demand for treasuries already mostly is based on the purchases of the Japan and European Union. Great Britain now has no free resources to support United States debt, so mostly it stands on the shoulders of the Belgium and Japan. No other foreign investors are buying United States treasuries right now. China is selling, Arab countries are also selling. So, and this process probably will accelerate. From that standpoint, with this recent decision, we suggest that it's some really big reason stands behind it. It's definitely not because of the 5 billions, because it's not everything, actually nothing to speak about. It resolves no problems. And here are some really political moments stand behind it. And it seems that something starts burning inside in political stage. So that's what we think currently about this decision. So we will see. But based on this performance, we suggest that 10-year yields might go in right to the 5% very soon. So it definitely will be negative for demand for United States debt. Speaking about the short-term stop in the gold market, mostly we will start the next week with the same trading plan as we already have. So our trading plan is based on the grubber. It suggests retesting of this stop. Performance on the daily chart, on the intraday charts, tells that everything stands okay with this trading plan. On the daily, you could see that grabber is still valid. We do not have any significant pullback here. Market stands in a very tight range, making an attempt to keep going higher. And here is definitely we start seeing some signs of the bullish dynamic pressure when the trend stands bearish, nominal trend. By the MACD we have bearish, but price action is not. It's moving higher. On the 4-hour time frame chart, first of all, we've got the grabber on Friday in the beginning of the session that we talked about. And take a look by the close of the Friday session, we've got another one. So these two grabbers suggest taking out of this top. So the suggestion that theoretically we could consider taking a long position in this area was not bad, and this market has shown some pullback here. We'll see. Another good sign I suggest is that market has not retested this trend line. So previously, as you could see, every time it is testing this support line, but this time, even after forming of the engulfing pattern, market has not tested it. We will see. Maybe this is just a retracement of the engulfing. So later we could get a kind of the A, B, C, D pattern to the downside. I'm not occasionally still keep COP target here around 23.52. It's just because this is also the target of this engulfing pattern. But with the grabber in place, everything could happen. So theoretically, we could see even upward continuation here. It's easily could happen, especially because recent decision in the house has been made in the weekend. So we will see what will happen and demand for the gold next week. On the hourly chart, picture also mostly stands the same. You can see this is healthy bounce from the level that we have specified, meaning this confluence. Now market is coming to in touch with the MACD once again, and here we will see maybe we will get another bullish grabber in the beginning of next week, which will be also supportive for the further upward continuation. A local OP stands around 24.30. Just to remind you why this 24.30, 24.50 area is important. Although we have major targets such as the OPs on the monthly chart significantly higher, it stands around 25.50 area approximately, but 24.56, this is extension of the BC leg on the monthly chart. We can't call it as a grabber because of the as a butterfly because of the structure of the swings, but by its content, it has approximately similar features. So this is 161, the extension of the BC retracement on the monthly chart. That's why market has reached this level and now stands flat around it, flirting, and of course due to the overbought that we have. So that's what we have on the gold. As a bottom line, we're not considering taking new shorts by far, and keeping the bullish view, suggesting that market should retest and return back to the previous top that we have on the daily chart. This is the minimum target of the grabber. Concerning taking the position, if you have taken position on Friday here, you could move stops to the break even. If you intend to buy later, it would be probably better to split the position, as I always recommend to do, especially when you have so choppy performance, with the chances still exist for possible retracement down on some ABCD pattern that we have, for example, on the follow time frame chart. So here's going to be the ABCD to the COP around it. Just watch for what will happen. If we get the grabber, you could take some position here. If market still will show the deep retracement, you add more and lower levels. But in general, we could get, for example, this garter steeple to buy, right, a bit later. But in general, overall bullish context is still valid here.